Well, good morning, good afternoon, good evening, and good day from Sydney. My name's Ian Lachlan. I'm the chair for this session today. Welcome. We are in the last time slot of the whole conference here, so we're going to be closing out the conference at the end of our session. We have an interesting mix of topics today. I'll just touch on those very briefly, and we won't spend a lot of time, I won't spend a lot of time introducing the speakers. I'll be asking the speakers to introduce themselves. But let me just touch very quickly on the three topics that we have. The first is actuarial responses to the pandemic in the UK. And we have three speakers. Those three speakers are on the screen. So Stuart, Mcdonald, Colin, Dutkiewicz. I hope I got that right, Colin.
Very good.
And Matthew Edwards. The next one is sustainable for price cropping insurance products. The speaker there is Philip Ngare. We are having trouble connecting with Philip. So I'll keep you informed as we go with that. We have basically half an hour set aside for each of the three presentations. Nominally, there's 20 minutes for the presentations and 10 minutes for Q&A. That won't be exact, of course. If you have questions, please, I encourage you to put them into the app. We'll monitor the questions here and I'll pass them on to the speakers at the end of their presentation. Now, without further ado, I will now hand over to Matthew to introduce this first topic.
Excellent. Thanks very much, Ian. Thanks all of you for joining either now or watching the recording in future months or years. A very, very interesting subject, as I presume you agree, otherwise you wouldn't be watching this. Just want to explain by way of a very quick introduction that the way we've done the ordering. So there have been three substantive groups within the sort of actuarial community, the actuarial profession in the UK, the COVID-19 Actuaries Response Group, the IFoA's COVID Action Taskforce, and the Continuous Mortality Investigation. And we've ordered this talk in that order, as you can see before you, for the reasons of trying to sort of think through the three different approaches to responding to the pandemic. So the COVID-19 ARG was, we think, the most innovative approach. We actually sort of set up the ARG, Stuart's going to talk through this, outside the whole remit of the profession for various reasons. So if you like, that's the most, if you like, explosively innovative or innovatively explosive approach. That's so completely outside the formal remit of the profession, and that's done great things, as Stuart would explain. And then the COVID Action Task Force set up within the remit of the profession, looking at lots of important aspects, and Colin will talk through that. So that's, if you like, a more sort of normal approach from the profession. And thirdly, which feels as if we're putting the CMI in third place, which is unfortunate because I'm going to be speaking from the CMI perspective. The CMI has a very, very sort of tightly constrained governance, as I'll describe very briefly in that session. But despite that very tight governance, very sort of tight planning and objectives and so on, we thought we were able to respond with great public acclaim, and also, if like, insurance and pension fund acclaim in various ways in respect to the pandemic, given our remit. So that's, if you like, the ordering in order of, if you like, innovation and creativity. So hopefully we all convince you that we've all done within our three groups very useful and important things. So that's it from me by way of mini introduction. So over to you, Stuart. Thanks.
Thank you, Matthew. Welcome, everybody. I'm Stuart Mcdonald. Some of you will have heard from me earlier in the conference, where I did a plenary with Nick Coatsworth and Maya Gould. I'm not going to repeat all of that material here. Please watch that one for more info if you are interested and this piques your interest. I talked there about vaccine priorities, the use of Simpson's paradox to explain mortality differentials, and the strength of the ARG's multidisciplinary team of volunteers. I also talked about the use of media and social media. I'm going to expand on that today, go a little deeper into sort of three different case studies of media misreporting that the Actuaries Response Group dealt with mostly in the first year of the pandemic. So if we could turn to the first slide. This is an example from March 2020, and I should say I've picked out 3 contrasting examples here, moving from one which was, I think, with the benefit of hindsight, perhaps a bad faith example, through to one of sort of naive mathematics, through to one of genuine attempts to do the right thing being misconstrued in the mainstream media. So hopefully 3 interesting and contrasting examples. Now, this one is all about communication of uncertainty around the prevalence of COVID early on. So March 2020, right at the start of the pandemic. And this paper was released suggesting that the coronavirus might already have infected half of the UK population. Now, the premise of this was that we knew the number of deaths, and of course, we knew the case fatality rate, so the number of deaths divided by the number of official cases, but we didn't know the infection fatality rate, the number of deaths divided by the total number of infections, and that there were lots of different, you could solve for lots of different combinations of infection fatality rate times prevalence gives number of deaths. So they gave examples where the number of people susceptible was between 0.1% of the UK population up to 10%. Now, there was no justification given for these examples, and the view of the expert clinicians on our team, and the actuaries, was that this was pretty implausible. I mean, 1 in 5 over 65s has heart disease, a similar number have chronic obstructive pulmonary disease. So, you know, these numbers all seem very, very low. And indeed, we were able to show with a quick bit of maths that the lower bounds, particularly 0.1% and 1%, were entirely implausible. And indeed, that they would have implied that 80% of Italy had already been infected. And it should have just been immediately obvious to the authors, just from comparing the deaths in the Lombardy region of Italy to the wider country, that, you know, there was something very wrong with this modelling. So this was a 24-hour from conception to release bulletin, done, peer-reviewed, and issued very quickly in response to what we saw as seriously, reporting with the potential to mislead in very credible mainstream media outlets. I'll turn to my second example on the next slide, which is more of a naive projection, but this was a dangerous one too. Again, this had wide coverage in mainstream media outlets, and this was by an engineer, mathematically literate guy at Imperial College London. Now, why is Imperial College relevant? Because that's the same institution where the very influential team of COVID modelers, Neil Ferguson's team, were resided. So this actually led to reporting along the lines of, they've changed their mind. Those people that were warning us about 500,000 deaths in the UK are now saying no more than 5,700. Look, nobody's got a clue what they're talking about. So this false equivalence between this kind of one person operating on his own versus this team of experts was concerning. It was coming at a dangerous time. We were just introducing social distancing measures, and this felt like it could seriously undermine that. So again, this had an immediate response for us. We were able to very, very quickly show that, just naively applying the Chinese lockdown pattern to UK deaths, irrespective of what social distancing measures we were to introduce, was completely the wrong thing to do. And sure enough, and tragically, we were proved right just days later when the number of deaths in the UK went sailing past, as you can see on the chart, the maximum all-time ceiling that had been asserted. But, in this case, the engineer did issue an apology and a correction. But as any of you that know the media will know, that got just a fraction of the views that the original stories did. And my final one is on the next slide. And, I've titled this, "It Can Happen to the Best of Us." Now, many of you will know the famous risk communicator, Professor Sir David Spiegelhalter, literally wrote the book on effective risk communication. Now, this chart that he produced for the media was intended to show a really interesting result, that the mortality risk from COVID was very similar to your background mortality risk. So your risk of dying from all other causes combined. Now, this is pre-vaccination, of course. Fascinating result, not inevitable, as some people have sort of suggested. I mean, Spanish flu had a very different fatality pattern. And of course, what he was trying to show was that COVID essentially, if you assumed that everybody got infected, would be approximately a doubling of mortality risk. But actually what this chart was interpreted as is the risk with COVID is no higher than normal. So complete, inversion from a lot of people when they saw this. And actually, if you think about that 1%, that doubling of mortality rate is quite an interesting result, because if you assume, because of the way infection prevalence works, that about 80% of the population would have got it, then actually that takes you to a very similar number of deaths as the ICL team projected. So even with great care and enormous skill and practice with risk communication, when things are moving at pace in this kind of crisis situation, there is a risk of things being misinterpreted. So those are my three examples. Hopefully that's helpful, along with the talk earlier in the session. I'll hand over to Colin and join you later for Q&A.
Thank you, Stuart. While Stuart and the rest of the team who set up the ARG were having fun putting out these bulletins within 24 hours, sort of in an unrestrained but very professional manner, within the Institute and Faculty of Actuaries, there was a bit of a hesitation of what the profession should be doing. We had all sorts of reactions. The one reaction was, we're smart people with influence, we should be doing stuff. And at the other extreme, we had some people saying, we're not epidemiologists, we should stick to our knitting and look after our financial institutions that we're supporters of, and keep quiet unless we really had something important to say. So what we did within the IFoA is we set up this COVID Action Taskforce. It had to be under the governance of the IFoA, so things had to be vetted before they went out to public. We had to make sure there was peer review process, all these sort of things. But we wanted to get stuck in. So setting up this task force, the idea was to support practicing actuaries in what they do in the current environment. And we really broke that down into three categories. One, there was preparing material that is just useful for members of the IFoA. They pay £800 a year. They deserve to have some material supplied to them just as members of an association. Then we had the middle category of actually supporting practicing actuaries. And this is becoming more and more important now post-pandemic, is if you're a pricing actuary or valuation actuary and you're trying to determine mortality rates and morbidity rates, etc., how do you actually do that in the current environment? In 2020, 2021, you had no idea how to do it. Now you have some idea of how to do it, but it's not the same as it was before. So how should the profession support practicing actuaries actually do their job? And then the third category of audience of producing material is in the public interest. What things were happening out there that actuaries have a voice that they should be raising and saying, either something has been miscommunicated, as the examples that Stuart's given, or there are issues that people are blind to, or there are consequences down the road that we need to be aware of. Now, I must admit, we didn't call the inflation spike as one of the consequences, but maybe we should have, maybe it was inevitable. But so these were the three categories of information we were trying to provide as members of the IFoA. And we had to do this much faster than the actual profession typically organizes. Typically, the timeframes would be, we'd set up a working party. That working party would take 6 months to produce some material. It would take another 6 months to have that peer reviewed and start presenting it. And maybe a year later, you would have some good curated material and research to be used. But we didn't have that sort of time, so we had to change the way the profession worked in getting things done. We did a massive call for volunteers around Easter in 2020. We got 580 volunteers, which is difficult enough to manage in itself. They were from 49 different countries, which from the UK profession's point of view was actually rather unique. We have this issue that it's a UK profession where something like half the membership is in Asia Pacific, and a number of other countries that are affiliated in a sort of Commonwealth sense to the UK profession. But getting participation in IFoA formal working parties beyond UK has often been hard. So to get 49 different countries involved was fantastic and really broadening the boundaries of what we would normally do. We organized that into 93 work streams. So again, a massive number from a logistics point of view. The staff of the profession were fantastic in helping with that. But at the end of the day, instead of having the staff of the profession managing things, all these 93 work streams had to be self-organizing, self-governing to do their work as quickly as possible. At the end of the day, we put out 167 types of output. Those range from formal papers to webinars to blogs and everything in between in terms of what the actual output was to make commentary on what was going on. And from those three categories we had previously of members of the profession, practicing actuaries and the public, we actually added a fourth one, which is really just giving people something to be involved in. So instead of the members of the IFoA sitting back and watching this all flow, we now had 588 of them that could participate in what was happening and get some experience with being at the forefront of what was going on. We ultimately had a hackathon at the end of it, which was good fun. That was interesting, and there was one by a team from Nepal. And they had looked at all the other work being done by actuaries and epidemiologists around determining the R rate at that point in time. And they had this tremendous problem where they were sitting in Nepal, which is a rather small country next to massive India, watching what was happening in India, figuring out what is going to happen to their country, and concluding that what was being done at a governmental level and a statistical level wasn't good enough. And in the hackathon, which was 3 days, they produced some good models for the Nepal population that then became rather important for the government running the pandemic in that country. So this is the ricochet effects that we had of the work that we were doing. Moving on to post-pandemic now, has the pandemic finished? Are we in the endemic phase? What is happening with mortality now is extremely difficult to conclude. From an actuarial point of view, and my background is in the life insurance practice, is all driven by interest rates. So the graph on the left there is in a Solvency II world, everything is run off the risk-free yield curves published by the regulators. Those yield curves jump around. Inflation comes along, any other event comes along, those interest rates move everything that we deal with on an actuarial basis. The post-pandemic is watching what happens to that. But from a more traditional actuarial point of view, the biometric risks are the interesting ones. All the trends that we had and we monitored have been disrupted. So now we get on to helping practicing actuaries do their job. So the one working party that we have now persisting post-pandemic is a working party that's saying, how should actuaries determine those long-term assumptions given the disruptive event that is the pandemic? And a very simple example is a lot of life companies have the determination of their mortality and long-term mortality improvement assumptions set on maybe a 5-year moving average of what the experience is. But given that you can't use the data for 2020 and 2021 in the normal way, what do you do about setting your assumption? And once you've set your assumption, how do you go about communicating that to your stakeholders? Be that your shareholders, be that the regulator, whichever stakeholder is interested in what's happening. And how does that play out over time? So what happens with mortality? In the UK, we have a massive longevity market, as they do in the US and Netherlands and Canada and a couple of others. Morbidity, disability income business is a big business in Australia, as many other places. And of course, lapse rates are the underlying one that determine the value of our businesses on a regular basis. They have to be looked at. So post-pandemic, the IFoA now is doing work to produce material that is useful to practicing actuaries and how they do their job going forward. And finally, if we sort of take that upper level to the macro picture of how to actually respond to stress events. We had the great financial crisis of 15 years ago. We've got the current inflation crisis. How does the profession rapidly respond on a cross-practice basis of what these wider societal impacts are? And that's an area of discussion within the profession of what more we should be doing. With that, I'll pass you over to Matthew to talk about the Continuous Mortality Investigation Unit.
Excellent. Thanks, Colin. Thanks, Stuart. So I'm speaking on behalf of the CMI. I was chair of the CMI, but by a rather sort of strange dating from March 2020 through to February of this year, which if you sort of think about it, it's obviously sort of 99% coinciding with the emergence and then the sort of ongoing virulence, and then hopefully moving to a sort of a milder endemic phase of the pandemic. So complete overlap there. We sort of introduced at the start the three groups in order of, if you like, innovation, in the sense that the CMI is third here because we were the one that was already existing. In fact, not only already existing, we'll actually shortly be celebrating our 100th centenary, so hopefully there'll be some fireworks in respect of that. So I just want to talk through how, despite the fact that we were sort of had a very tight governance, very tight remit, we were able to still, we think, and according to all of our subscriber feedback and so on, produce lots of great output of great help to the wider public as well as our own subscribers. I need to sort of very briefly explain that the background to the CMIs. It might be quite unusual to some of you from your own sort of non-UK actuarial professions. So we're a subsidiary of the IFoA. All the CMI committees consist of volunteers, but the big sort of thing, the novelty perhaps about the CMI is that we've actually got a paid secretariat who's actually responsible for collecting all the data. So that allows them to sort of collect a sort of individual level of anonymized data with sort of a great competence and thoroughness, and also then do the analysis. To do that's simply a paid secretariat job. So the CMI is funded through subscriptions from our sort of subscribers, so noting there the three sort of main camps of subscribers. But that subscription mechanism means that we have a very tight remit as to how we spend the money. We can't just go off and create lots of interesting sub-working groups just because we think it'll be interesting. But those constraints do not at all prevent us from doing lots of, we think, very valuable things, both for subscribers and the wider public. And we have a lot of very good feedback in respect of that. And in the next couple of slides, talking through the sort of things we've been doing. If we could move on, please, Colin, thanks. So one of the big things, probably the thing we've been most well known for in this sort of media and the sort of the wider public engagement is our mortality monitor. So we started that publishing weekly reports, but right in the early days of the pandemic, and doing that in the public domain. So by way of contrast, because we're sort of paid by subscribers, almost all of our material has been behind a firewall. So for instance, our sort of projections model, as you might imagine, a huge amount of work gone into it. So that's for subscribers only. But the mortality monitor we decided to put outside the firewall simply because it seemed to be so important in the public interest. And the key output of that was thinking through what are deaths from the pandemic, given an appropriate baseline. And part of the value add from that was that at the time of the early months of the pandemic, there's a lot of confusion as to what was or wasn't a COVID death. There are lots of debates in the press, some well-informed, some badly informed. You got the flavour of that from Stuart, as to whether people are dying from COVID or with COVID, and whether it's a big thing or a small thing. So the CMI was able to actually introduce a new metric to certainly initially seemed to be definitive in terms of what was happening with mortality. So if we move on, please, Colin. So we'll go through massive detail in this graph because we're sort of starting to run out of time, but this shows our comparison of our own excess deaths calculation with the two prevalent measures in the UK. And I know that those two alternative measures have been, that you've used similar methodologies in many of the other countries out there. So yellow, COVID on the death certificate, so that was the Office for National Statistics measure, and light blue if you died within 28 days of a positive COVID test, and that's a slightly strange acronym there, UKHSA, which was previously called during the pandemic Public Health England, which you might have come across more often. And we're comparing that with our excess, and our excess calculation is, to our sort of actuarial minds, it seems fairly simple, sort of actual deaths minus expected deaths, and the expected deaths again sort of seemed simple from an actuarial perspective, but it took a surprisingly complex to explain some of these things to the wider public. It's just comparing deaths with what you would have expected if you had taken the 2019 mortality rates and just adjusted them to the following year or the following years, because you've got 3 years and also 3.5 years there, with age and gender standardization. And you can see there early on excess deaths, so this the dark blue really sort of shooting up initially, as you would expect given what we now know about the pandemic, but the yellow and the light blue, the two, if you like, official measures, quite a lot lower. And then as the pandemic goes on, and if the authorities relating to those two alternative measures sort of start become more mature, then the three measures do sort of coincide over much of the rest of the year 2020. What's interesting about excess deaths, I won't sort of talk through every week there because there are quite a lot of weeks in that whole long horizontal axis, but you can see later on in the pandemic the excess deaths in some stages actually going down, to some extent reflecting sort of the forward displacement effect. But also over the last 6 months or so, there's been a lot of interest in the UK, and a sort of equivalent interest we've seen in other countries, although the CMI is UK only. Excess deaths are a lot higher than the, if you like, official COVID deaths from whichever measure. So that's kind of one of the great conundrums now, is trying to sort of disaggregate those excess deaths and trying to work out to what extent some of those may or may not be carrying forward, which ties in with some of the aspects Colin was talking about. So that's been very well received. As well as that, we're doing our, if you like, normal work for subscribers. If you turn on to the next slide, please, Colin. Thanks. We, as well as our normal work for subscribers, trying to do what we could in a sort of COVID-19 impact analysis. So, for instance, the annuities committee, we sort of managed to get a very early analysis of mortality in the first 6 months of the pandemic, so first half of 2020, and that paper came out roughly 3/4 of the way through the year, so very, very quick, and that gave a very interesting sort of shape. So the same sort of shape you'd expect from pandemic mortality, but a much lower effect, reflecting the socioeconomic differentials. And some of the other committees are coming up with very interesting results. So the Assurances Committee coming up with critical illness results, which actually showed surprisingly a surprising lack of trend, so a completely different shape from the mortality shape, again likely due to sort of delayed diagnosis effects. Or the Income Protection Committee did a very interesting paper, and in fact the income protection results are also sort of somewhat different, completely different from what we're seeing on the mortality side. So that's all the different committees, all the different components of the SIM are really pulling together, doing what they could on a sort of best endeavours basis, and obviously some of the analysis there, given the timescales, we had to almost invent quite new methodologies, for instance, for coping with very high IBNR, given the short timeframes we were moving to then. But also some more COVID-19 specific stuff. So the COVID-19 Working Party we set up, and that was thanks to Steve Bell for heading that, and that reported, as you can see there, in fact, that link we also put out in the public domain for the greater good. And we've also been putting in the public domain more and more blogs, or like thought pieces, probably a better word, on our work. So that's all accessible, and pretty much anything we do now which is of any interest, either subscribers or likely wider interest, we now try and sort of set out some of the key points in a blog on the public side of the firewall. So hopefully that's given you a good idea of how, even with very, very tight constraints around our remit, we're able to do lots of good things, both for, if you like, normal insurance and pension fund subscribers, but also for a wider set of stakeholders. So that's it for me. If I have got another slide, I wasn't going to speak to it. Charles, for Stuart, so I had some audio difficulties. We're just having a question, which Stuart is volunteering to answer, about our sense of what the sort of public engagement with our sort of collective responses was, and some metric around that, and how it's changed sort of perceptions of the actuarial profession.
Yeah, so the actuarial work from the UK has been very well received, as indeed I know actuarial work from other groups around the world, like the Australian Actuaries, was also very well received. So our work found its way to the Scientific Advisory Group for Emergencies. So that's the expert team advising governments. So they were particularly interested, for example, in the work we did on the vaccine priority order. So we found a very effective way to communicate that. They were very interested in the way we were analysing and explaining excess mortality, and other bits of work we did besides. So we built links into the official mechanisms of government, if you like, and we're having regular meetings with the Department for Health and Social Care through a key part of the pandemic, and did modelling for them in the run-up to the second wave on, what would happen if hospitals became overwhelmed, for example, and the impact of long COVID. So yes, I think it's been very positive for the perception within government, within academia, and within the wider public.